Hello, welcome back to Tab U. My name's Katrina. I'm back again. This time we're joined by Harry Dugg and our very special guest, Magnus Dudzie. Would you guys like to introduce yourself?
Hi, my name is Harry Dugg. I'm Business Development Manager at TAB.
And I'm Magnus Dudzie. I'm the Executive Director for the finance company.
This episode is going to be on mortgages for first-time buyers. Magnus, our special guest, would you like to give us a little bit of info about the finance company before we start?
Yes, happily do so. So the finance company is a brokerage. It launched in September 2021, last year. So basically, experience-wise, we go back at least 35 years in total, and we are regulated by the Financial Conduct Authority. We cover the whole of market in terms of mortgages and property development, anything that goes with property finance.
Perfect. So you're well suited to help me out today. We'll kick things off with the first question, which is, what is a mortgage broker?
Okay, so a mortgage broker basically is a representative, on behalf of anybody looking for a property finance. So basically, we act between yourself, the buyer, and the lenders out there. So we do our best to look for the best finance package for you by asking a few questions.
Yeah, and when I'm looking to get a mortgage and I'm choosing my mortgage broker, what things should I be looking out for to know that they're well suited for me or they're the right person to go for? Because there's a lot on the market, so it's kind of, how do I know that you're, Magnus, are the best?
Well, I'm the best. Yeah, but basically, the first thing to do will be to check out the mortgage broker themselves or the company they work for. Most of us would be registered with the Financial Conduct Authority. That is basically the regulatory arm for the finance business. So, in effect, the most important thing is to check out where you may find reviews on people, so at least you know where you're going is sound or not. And it's just a case of doing a little bit more research on that person. You may want to speak to 2 or 3 other brokers and then decide on whichever one you want or whichever one you trust most.
What does it mean if they're not registered with the Financial Conduct Authority?
Okay, so that means they can only conduct non-regulated business.
Okay.
Non-regulated business is properties of finance where you're not going to be living in.
Investment properties.
Investment properties. Nothing to do with you living in or any member of your family living in. So it has to be investment property.
And what are the benefits of using a mortgage broker rather than me doing it myself?
Several, to be honest with you. First of all, money saving. Yeah. You remember I mentioned we cover the whole of market. So that's the best thing about it. So we will do quite a lot of research, from completing a fact find with yourself. A fact find is basically information gathering to find out what really ticks your boxes. And once we've done that, we come out with perhaps 2 or 3 options for you. Basically, it's not just about money saving, but it's looking at your long-term goals and making sure everything that we advise you to do is what meets, your long-term goals, basically.
And kind of quickly on the mortgage broker side, and rolling on the back of yours, Harry, if I'm a first-time buyer and I'm looking for a mortgage, I will have to go for a regulated one. Is that correct?
If you're going to be living in, yes.
Yeah. Okay. So, yeah, of course, because you could also be a first-time buyer and not live in it.
Correct. Or any member of your family could be living in it, yeah.
Got you. And what can a mortgage broker do differently to myself? You kind of touched on that one. They've got kind of the access to all market, really, isn't it?
That's right, yeah. So, in the past, probably before 1984, I believe, October 1984.
I don't know that date.
Yeah, so, it used to be mostly the banks. People used to just go to their banks and say, look, my savings are coming in here, or my income is paid into the bank. How much can I borrow? And it used to be just the banks. So now it is very complex. I would say it is complex because you've got so many different variations of the types of mortgages you can have. We'll touch on the types in a few minutes, but it's a case of it's not, as I say, it's not just about saving money. It's about long-term goals as well. So, yes, we do charge a fee, for for doing this for individuals. It could be companies as well that we cover mortgages for. But basically, it's a case of making sure that you've got the best on the market, and it's just that,
Would you say there's better products out there than the mainstream lenders or the high street banks, or more tailor-fit products for the client?
Yes, I would actually sort of echo that, because the banks are set in their ways, whereas you've got other lenders outside of the banking system who are more flexible. There are quite a few of them that I can name. Banks would typically not entertain individuals or companies with not such great credit scores.
Yeah.
So that becomes an important factor. So a mortgage broker, and I'm glad you asked that question, a mortgage broker could actually make the difference between you actually getting your property or securing your property and you being declined by your bank. Yeah, that makes a lot of difference, because you would never know why you were declined until you go to a mortgage broker. And at some point, it might have been a bit too late.
And then that's where you come in with the whole of market.
That's right, yes, because whether or not you have good credit, bad credit, or whatever it is, we can fix it for you.
How many lenders do you sort of have on your panel?
Wow.
Off the top of your head.
Okay, so on our panel, we've got perhaps over 190.
Wow.
Which is a lot to go through, but of course they're all sectioned into different types of lending. But we don't necessarily go just on our panel. We go outside of the panel.
Yep.
As I say earlier, we do search the whole of market to make sure if there's somebody on our panel, it really means that we can have preferential rates. So that's why we go within the panel first. And if something doesn't come up for that, we go outside on the panel. Yeah, so.
Great. So I guess that kind of covers most things of what actually a mortgage broker is. So we'll move on to question number 2, which is what are the types of mortgages you can get?
Again,
where do we start?
Well, put it this way. Let's go with the easiest one. Fixed rates. I'm sure a lot of people have heard about fixed rates. So fixed rates sort of come with clauses, and that's something that you've got to be watching out for if any mortgage broker offers you a fixed rate. So they vary from perhaps 2 years. Not many people go for a 1-year fixed rate. It's just not worth it. So generally from 2 years, 5 years. Now, actually, some lenders have come out with 10-year fixes, and now there's a couple of lenders I know who have come out with 25-year fixed rate mortgages.
Wow.
Yeah.
So just kind of for our listeners thing, a fixed rate mortgage is that the interest rate is fixed.
For a period of time. That's right, yes.
Okay.
Yeah, you remember I mentioned about clause?
Yep.
Yeah.
Okay, so within the fixed rate periods, say you go for a 5-year fixed rate, what you've got to watch out for is, all right, so what if I want to move in the 5 years that I've fixed my mortgage? Can I port the rate to my next property?
Yeah.
That's important. And what if I have a windfall? Can I pay some of that mortgage back? So some lenders would allow you to pay a percentage of what you borrowed within that fixed rate period. And some lenders would also allow you to port that mortgage to your next property. So those are the things to watch out for. Others would be like, no, you can't do anything until the fixed rate period is over.
What are the sort of penalties in, paying too much of your mortgage back within 1 year?
So that's what you call the early repayment charges,
Okay.
which will be shortened as ERCs. That's one thing to look out for. So it could well be, it comes in percentages depending on the lender.
Okay.
So it's more on a sliding scale. So if it's a 5-year deal, you might find that in the first year, if you paid off a big chunk of your mortgage, you might have to pay 5% of whatever you've paid off. And then 4% in the second year.
And is that always in black and white on your mortgage contract made clear?
It is.
By
We're all, by law, because of regulation, everything has to be made very, very clear from the beginning.
And so we mentioned fixed rate.
Yeah.
What other mortgages are there out there?
So then we've got tracker mortgages, tracker rates. So trackers are basically sort of rates that track the Bank of England base rate, currently at 0.5%. So each lender is different. They might put a little bit of interest, well, they will because they have to make a profit. So they will put a little bit of a percentage on top of the Bank of England base rate. So if a lender says, look, our rates are a tracker plus 0.5%, that means in today's money, it will be 1%. So again, that's something to watch out for. So that basically tracks the Bank of England rates going. It could go up, it could come down.
And again, just for our listeners, when it goes up, you pay more.
When it goes up, unfortunately, yes.
And when it goes down, you pay less.
Everybody will be happy then.
People's happy, and
correct.
Yeah,
that's right. Yeah. Then you've got discounted rates.
Yeah.
So discounted rates are similar to tracker rates, but with a discount rate, it's the lender's own internal standard rates. So they could say, look, our rates are circa 0.5% again, just for ease, and they'll then discount that rate by, say, 0.25%. So your pay rate will now be 0.25%, and it could be 1%, and then they'll discount it by, say, another quarter. So your pay rate will be 0.75%, but that's based on the lender's internal rating system.
Okay.
Yeah.
And not every lender will do that, I guess.
Most lenders offer all the types of rates available: fixed rates, variable rates, tracker rates, and all. So it's all part of it's important to look at which lenders you're dealing with, because some of them you've got to look at the bottom line of the rates, the discounted or variable rate from the lender. That will give you an idea whether or not their rates are going to be high going forward, or whether you're going to deal with the discount rate initially and then move on to a fixed rate.
And in terms of the base rate, what is the base rate at the moment? And do you see it going up in the next couple of years, future?
Okay, so base rate at the moment is 0.5%. That is set by the Bank of England.
Yeah.
That's normally every 2 weeks on a Thursday. That the committee meets and comes up with whether or not it stays the same or goes up. Yes, there is a danger that it might go up. There's been a lot of talk in the press that it's possibly going to go up. Yes, it was happening. There was a lot of talk happening about a month and a half ago that it might go up, and unfortunately, it did go up. So there's still talk that it might go up.
Okay.
So to summarize on the types of mortgages.
So yes, we have fixed rates, we have discounted rates, we have tracker rates, we have variable rates. So those are mainly sort of the ones to look out for. Yeah.
Perfect. Leads us nicely on to question number 3, which is what type of mortgage is best for the first-time buyer?
Okay, so yeah, that depends on individual circumstances. So you got to look at the person's risk appetite. By that, I mean, are they risk averse? Do they want to be secure in the next, let's say, 2 years, 5 years? It might depend on their job. They might be up for promotion, and looking forward to high income. So in that case, you might just say to the person, look, if you're looking for promotion and you're not looking at necessarily moving out of town, it might be best going for maybe a 2, maybe a 5-year fixed rate. But most importantly, whichever one of those you choose, make sure it's portable. Yeah, because that's one of the things. At least you know that. Let's say you borrowed 100,000 on this first property, and the rate was fixed at, say, 1%. When you go to your next property, which could be in 2 or 3 years' time, you might be borrowing 200,000, but at least you know that the first 100,000 was already fixed, and therefore the next 100,000 you're borrowing, in addition to the existing, will be at a slightly different rate, possibly if rates have changed. You might get you at the same rate as you had your previous one. So that is the thing to watch out for first-time buyer if you go for a fixed rate. If you're not risk averse, then of course you can go for a tracker mortgage, but not in this kind of climate. That much I can always say to any first-time buyer: go for a fixed. At least you know where you stand.
Yeah.
Not many people. Nobody knows much about what the employment situation is going to be like, so we have to be very careful on that. But yeah, ideally, I'd say for any first-time buyer, ideally a fixed rate.
And kind of how long does it take to get a mortgage?
Again, it varies from lender to lender. And it depends on the lender's workflow. But I'd say typically from finding a property to moving in, give yourself perhaps 8 weeks, maybe 12. Normally we say 12, but in this day and age, with all the technical abilities that we all have, it could possibly go down to 8.
I can actually jump in on that. I recently just got a property, and it took us 6 months to get the mortgage. It was nothing to do with the mortgage advisor, nothing to do with the lender. There was issues on the land reg. So, in terms of timescale, there's other factors that may come into it.
Correct. You're right, actually.
Yeah.
Yes. Yes, there are factors that can come into it. Again, if you're buying through an agent, of course, you're going to use solicitors to do your legal work for you. So the solicitors in the first instance would have checked out the title register and other things that may affect your purchase.
Yeah.
So I'm
that was
really
the issue.
surprised that that didn't come up, initially, because that's the first thing that the solicitor will do. I remember myself, I was buying a property some time ago, probably about 3 years ago, and unbeknownst to me, the person selling the property to me had only just bought it 4 weeks before then.
Oh, wow.
Yes, and that is something that not many lenders will entertain. I didn't know this, so it was my solicitor that brought it to my attention. No, did you realize you only bought it 4 weeks ago? It was making a huge profit, but that is part of the world we live in. So solicitor brought it up to my attention, and because I'm into mortgages, I got to know that not every lender will accept that.
Yeah.
So I had to do my research and see who would accept that.
And so I'm looking for a mortgage. I found my broker. How far in advance do I need to know who my broker is before I apply for the mortgage? Is it like on top of the 12 weeks, or is that 12 weeks on average encompassing the time to on board with the broker and everything else that comes with it?
Ideally, you need to do your homework first before even committing yourself to a property. So yes, on top of the 12 weeks. So once you've decided that you're going to look for a property or you want to buy a property, I'll say that's when the homework starts.
Yeah.
That's when you start looking out for brokers, either within your area where you live or local to where you work. Because then, of course, access face-to-face meetings are important, I find, because it's not like I'm hiding behind a computer just giving you gibberish and all that. So it's important. I like to do a lot of face-to-face meetings because it gives that borrower a lot of confidence as in whom they're dealing with. So yeah, I would say you need to do your homework before committing yourself to a property.
And what kind of things should I look out for when I'm searching for a mortgage? I guess, I mean, I don't have a mortgage, so help me.
Great. So there are different costs in terms of looking for the mortgage. So I touched on solicitors. So there will be solicitors' fees. There will be a valuation fee. And in terms of valuations, there are 3 types of valuations when most people are buying a property.
Yeah.
There's the basic valuation, which gives you possibly about 2 or 3 pages of information. And then you've got the home buyer's report, which is a little bit detailed, possibly about 12 pages. And then you've got a structural report, which is a lot more detailed.
Yeah.
Typically, if the house has been built in the last, say, if it's a new build, it would come with some sort of warranty. So a normal mortgage valuation, standard mortgage would be valuation would be okay. To go for a home buyer's report, typically, if the house is semi-detached or detached, or has been, or you feel that there's something maybe not right, you might want to do a home buyer's report, which will be a little bit more detailed. And then, of course, I would always say, if it's a very, very old property, or again, you have suspicions about certain things about the property, you might go for a structural report. Having said all of that, you can go for a standard valuation. And if there's anything that comes up on the standard valuation, which your normal valuer will mention or touch on, then you go into the next report and find out a little bit more detailed information.
And kind of while we're on the kind of types of mortgages available, what if I am getting a mortgage with a partner? How do joint mortgages work? What happens if I was to sadly split up with hypothetical partner? Kidding. So explain.
Okay, so generally, both borrowers' income and our general credit criteria will be taken into account. So that's got to be borne in mind. You might want to find out a little bit more about your partner before you go into it, because remember I did say the difference between a mortgage broker and going direct to the bank may be the refusal or you getting that
Ah,
property. So yes, it's important to know a little bit more about your partner's credit and history. It's not just about credit; it's about criminal history as well. All of these things come into play. So long as you know about that, then that's fine. Again, lenders will take into account both salaries. You either
Mhm.
work both working or not. It doesn't matter. Some lenders will use. I mean, mostly these days you're looking at about 4.75, maybe 5 times your joint incomes. Some will be slightly less depending on your occupation as well.
mm-hmm.
If you're professional, these days I notice some lenders are offering, say, 6 times income for NHS workers.
Wow.
Oh,
Yes. Yeah. So there's a lot of things going on. Hence, you need a mortgage broker because
yeah,
we could research and give you the best possible deal. But yeah. So going back to the partner situation, all of these little things make all that difference. But coming on to the negative side of splitting up, whether it's marriage and you go and you divorce, that's one thing. But again, there's a legal. You can either go for what you call a joint mortgage, or or mortgage in common.
mm-hmm.
Yeah, the actual phrase escapes me right now. But basically, it means that when you go your separate ways, should there be a negative equity? For example, if property prices drop, that's what
Yeah,
you call negative equity.
Yeah.
So, say you borrowed 100,000 and now you split up. Your mortgage was 90K or 90,000.
mm-hmm.
The property is now worth 85,000. You've got £5,000 shortfall.
Oh,
Yeah.
Both yourself and your partner would have to bear that in mind.
Be liable
yeah,
for it.
That's right, yes.
Fine.
Yeah. So again, one of you might decide to buy the other person out. So in effect, you go to the mortgage lender and say, look, my partner and I've gone separate ways. Can I take over the mortgage? Again, the mortgage lender will look at your personal income,
mm-hmm.
say, well, you can't afford it on your own. You need your partner. So
Yeah,
that becomes a tug of war. That forces you to sell the property. Or your partner may say, look, okay, I'm going to remain on there, but we have to draw up a separate legal document, that have no financial interest, should the property price go up, because you'll be taking care of all the bits and pieces going forward. So there are little bits and pieces that can come into play. Again, these are unforeseen, but these
yeah.
things do happen.
And I guess when I'm applying for a joint mortgage, a broker would help me explain. You'd obviously sit down, explain the kind of pros and cons, and as you say, it was.
Yeah.
Is it in black and white the same way everything else?
Yes,
Yeah.
it's our job to do that. Yeah, and your solicitors will also advise you again in terms of a mortgage in common or joint mortgage.
Yeah.
So basically, with a joint mortgage, it means again, apart from divorce, one partner may pass. You never know. And
Yeah.
if that happens, if you have a joint mortgage, it means the property automatically reverts to your partner. And if if you hold a mortgage in common, it means if one party passes, hopefully each partner would have had a will. It means the other the surviving partner's part of the mortgage or the profit will go to their family or whoever they indicate that they want to take over.
Would you ever suggest to either applicant to get independent legal advice
It's ideal.
if the case is unique?
It's ideal to have independent legal advice. Yes, but then again, you also got to be careful how you phrase these things, because
Of course.
yes, again, it's down to the solicitors. Once they see how complicated each partnership is, they'll then advise you as to, look, we can do this, or you need to seek independent legal advice.
Fine.
Cool. Well, yeah, not buying a house, not getting a joint mortgage. So,
Well,
hopefully, helpful for our
it could help you.
listeners.
It could help you get the property that you really wanted. Yeah.
So, moving on to question number 4. What information do I need to supply when applying for a mortgage?
Any decent mortgage broker would ask you to get your credit report up front,
Mm-hmm.
so at least they can see exactly what's going on in your finances and your financial position, basically. So that is one thing.
Which credit reference agencies are they?
Yeah.
If I needed to get a report.
Yeah, so there are the two most known, which are Equifax and Experian.
Yeah.
And then there's a third, which I prefer for people to use, which is called Check My File. Basically, Check My File covers both Experian and Equifax, but you'd have to pay a premium.
Okay.
It's free for the first 30 days. Then you have to pay a premium of I think it's £13.99 and it goes on as you go along after the 1 month free trial. But you've got to remember to cancel that. That subscription after 30 days because it's automatically renews.
If you don't use it.
Exactly,
Of course.
But then the thing is, you're probably not going to want to use it constantly. Once you've had it for your purpose of getting a mortgage, you probably check yourself maybe once a year to see that everything is as it should be. Because unfortunately, there could be entries on that credit report that you don't even have a clue about that you'd have to want to investigate. So it's important to possibly see. You might get turned down for a credit card at some point and you don't know why. So this is why you might need that credit report. Of course, making sure your bank statements are up to date. Most lenders would ask for your last 3 months bank statements, and if you're employed, usually most the last 3 months pay slips. If you're self-employed, possibly the last year's SA302 or accounts, profit and loss accounts. So those are the main things to basically ID. Passport or driver's license. Not everybody travels, therefore not everybody has a passport.
Yeah.
Not everybody drives, so therefore not everybody has a driver's license. Either of the two is normally acceptable, and for proof of address, bills.
Yeah.
And talking about first-time buyers, very unlikely to have bills. The only bill you might have will be your mobile phone bill. Unfortunately, lenders do not accept mobile phone bills as proof of address. Possibly, again, driver's license if you do drive or have, being on the voters register is important. It does help the credit score. Your bank statements would be required as a proof of address if you're a first-time buyer and you don't drive. Or anything like that. Yeah.
And I guess we've mentioned credit score. What is that? What impacts it? How can I change it? Does looking at it, some, I guess we can do a bit of myth busting here maybe. If I go and look at my credit score, does that damage my credit score?
No, it doesn't. It doesn't. Basically, credit score, for people who do not know what a credit search is basically sort of a credit reference agency who takes note of every single move you make in terms of your finances. Opening up a bank account, taking out credit cards, your spending, lifestyle. If you miss payments, all of this will be noted on the credit report. That's what basically adds up to your credit score. So each agency has their own internal credit score. They're all very, very different. Again, each lender has their own internal credit score. So having a low credit score on any one of these doesn't mean you can't get a mortgage, because not every lender utilizes credit scoring. Because some lenders will look at the information and say, we like this guy or we like this girl. And, basically, we don't think there's anything wrong with it. And that's it.
So you're saying there's lenders out there which won't look at credit score, but will take your circumstances into consideration.
Yes, it could be a combination of both or none at all.
And this is why you come into play when it's important. You can go to the whole of market.
Correct.
To these specialist lenders.
Correct. Yes.
Right.
Yeah. So this the credit score basically sort of does play a big role for mostly the high street banks. Yeah. As I said earlier, they don't necessarily. Not every lender will necessarily use the score on that credit score to give you a mortgage. They'll look at it and do their own internal credit score because not everything basically matches what is on there. There are reasons why some people may have a lower score. If you're not taking out credit cards or taking out loans, your credit score may be low.
Yeah.
Yeah. And a lender may say, well, we don't know anything about your ability to pay. Therefore, it's very, very hard for us to, do this.
Yeah.
But then, of course, they'll look at your bank statement and see, actually, there's a reason why this person doesn't borrow. Savings are good. They're constantly putting away X amount every month. That's a reason for us to give them, a mortgage.
Yeah.
You can see you are reliable and resourceful.
And does applying for a mortgage impact my credit score?
Yes and no. Some lenders call what you call a hard search, and others will be a soft search.
Yeah.
So it might appear for others to know that yes, you've gone to, for example, I'll go for the alphabetical order thing. Accord mortgages. Not many people would have heard of Accord. It could be anything, but yes, it will show that you've actually gone to have a chat or make an inquiry with another lender. So the next lender might ask you what went wrong or what happened. Why didn't you pursue it? So knowing one that will do a soft search actually does help.
Yeah.
Not that you're looking to hide any information, but it's just to make life easier.
Yeah.
Because things can become awkward. You don't know why the first lender declined it, because they probably wouldn't tell you. All they're going to say to you is, check your credit score.
Yeah.
Go back and check it, and it's still the same information. You don't know why. So yeah, a soft credit search does help, but it doesn't necessarily affect you applying for a mortgage.
Fine.
Cool. And then I guess final question is question number 5, which is, how much does it cost to get a mortgage?
Again, it varies from lender to lender. And again, some lenders will offer to pay for your valuation. So that could be a free valuation. Others will offer to contribute towards your legal fees. Again, that helps. And then, of course, you've got your mortgage broker fees. Again, all of this can be built into, has to be built into the initial advice.
Yeah.
So we will go through and tell you. Perhaps it depends on the value of the property as well. Because again, you've got to remember you've got stamp duty to consider.
Yeah.
All of these. And there are schemes where there are incentives from the government where you don't pay stamp duty for first-time buyers.
Yeah.
So these are things to look out for. What price can I go up to minimize my stamp duty cost? That is probably the biggest cost you've got to be looking out for. But apart from that, those 4 main, I'll say, will be the cost to look out for.
And do I have to pay a mortgage broker if I don't end up taking a mortgage?
Again, when we meet up with any potential borrower, we have to give them a terms of business letter, so you understand from day one what I'm charging you for, and that terms of business will indicate whether or not you pay me, whether the case goes through, or whether there's no charge. So that terms of business letter is very, very important for you to have a read of, and then discuss it with the mortgage broker. Say what if and what this and that. So it's important.
One final question, which I read the article. One of the biggest lenders out there is the Bank of Mum and Dad, or the Bank of Mum or Dad.
Yeah.
Could you tell us a bit more? What does that mean?
Yeah, great phrase, isn't it? Yeah. So Bank of Mum and Dad is purely and simply each individual, be it a first-time buyer, let's concentrate on first-time buyers, asking mum and dad or grannies,
Granny, sorry.
To contribute towards the purchase of the property. So basically, ideally it's a gift, or you have to pay back at some point. Usually, I'll be surprised if Bank of Mum and Dad are charging you any interest. But usually it's free, or usually it's a gift that they would have wanted to give you at some point.
Okay.
And you take it now to utilize to help you buy or get onto the property ladder. So that's basically what it means, Bank of Mum and Dad.
Okay.
Yeah.
Thank you.
When you go to your lender, they will ask you the source of deposit. So it could be a contribution from your own savings, as well as part of Mum and Dad's or family gifted deposit. Some banks can be a bit funny in terms of where the gift is coming from, and they would ask that person to sign a declaration to say that they have no financial interest in the property. Yeah, it's important.
Good.
Cool. Any other questions? Me, Harry?
Thank you. That was very helpful.
Thank you so much for joining us, Magnus and Harry. Thank you. Where can we find you?
Okay, so the finance company is based in Borehamwood, 5 The Grain Yard in Borehamwood, WD6 4PH. Come look for me, and I'll be happy to help you answer any questions, or in fact, get you into your first property. And we will leave the website and contact details in the show notes. Thank you so much for listening. This has been Tab U, First Time Mortgages. This has been Tab U. Thank you for listening. Don't forget to like, share, subscribe, and leave a comment. And hopefully see you next time. Bye for now.